Qatar's foreign ministry. Normal traffic through Hormuz has not resumed. Morning bid. Ceasefire on a knife edge. Iran's army. We would open new fronts against US if it resumes war. Canada CPI. Expected to show rising inflation in April, pressuring Bank of Canada rate outlook.
Indian shares. Give up early gains. IT stocks rebound. Nasdaq's bullish momentum stalls as downside risks mount. Pause or start of a correction. Gold slips amid pressure from uncertainty over Iran peace agreement.
Markets swayed by Middle East developments.
Grab that coffee, grab that tea, grab that monster. will, boy! You guys ready? What is it, 100 seconds to go? Actually, that doesn't make any sense, does it? 200 seconds to go. Ooh, that coffee's hot. All right, let's do our risk poll. Oh, I guess YouTube has a lag. I was watching the YouTube timer. This timer's gone 0. All right, hang on. All right, let's go.
UK labour productivity rebounds 0.9% in Q1.
Never mad at the fact he's corrupt like a senator, soul in a rope, but you treat it like soap on a rope because my beats and my lines are so dope. Hey, good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, good morning. Sorry, I'm dressed so casually today. So what do you want to do? Gold, oil, Bitcoin. Yeah, actually, we got the markets are they're moving. So we'll go through and we'll see what the institutional investors are doing. That's the whole point of TradeR's analytics, to be able to do the math. Yeah, do the math on all the gobbledygoo macroeconomic stuff, yields around the world, spreads around the world, currency valuations around the world, supply and demand of commodities around the world. This tells us what institutional investors are doing. That's what we're trying to align up. Now, Forex.Today is a collaboration between TradeR's and Traders Way. They're our prime broker. So you use TradeR's and Traders Way together, match made in heaven. So we'll go through and we'll see what's up. Is it risk on or risk off? I don't know. Please answer the poll. But we will look at everything that needs to be looked at. We can cover, well, I take an hour or two to go through this with you in the morning, but really you could do it in 5 or 10 minutes on your own. And really understand what is happening today, in this week, this month, this quarter, put them all together, and even plan out the rest of your year based on logic and intelligence, looking for conservative, repeatable trades that are lined up with actual cash flows, fundamental, global, macro cash flows. So think of it this way. You can choose to swim upstream or just float downstream. Now, swimming upstream is a lot more work and is not likely to get you any additional reward. In fact, if you're very, very good, you're probably just going to stay in place and nothing changes except you get tired, you run out of steam, and you drown. That's the best case scenario. So anyways, let's go with the flow. He ate it. So, give us an update, Aiden. What's been going on? Good morning, Aiden here. Let us get you up to speed on the shifting market dynamics. Today's market sentiment is currently neutral and indecisive, as the daily risk pulse is showing a flat response that diverges from the stronger risk-on trend seen over the past month. U.S. 10-year yields rising to 4.623% are providing a tailwind for the U.S. dollar index, weighing on major pairs like EUR-USD and AUD-USD, while indices remain cautiously optimistic. 1. The UK unemployment rate came in at 5.0%, beating the expected 5.3%. Japan's capital expenditure also beat expectations, printing at 0.3% versus the 0.2% forecast. Gold is currently under pressure due to uncertainty surrounding the Iran peace agreement, while the Nasdaq's momentum appears to be stalling. Canada's CPI data is expected later today, with traders watching for signs of rising inflation that could pressure their central bank's rate outlook. Biggest movers right now: silver, Brent crude oil, and copper are down. VIX and DAX are up. Hey, not bad. That's a pretty cool summary, huh? News risk assessment, potential risk shift. The headline regarding Iran's army threatening new fronts against the U.S. represent a material geopolitical risk that could shift sentiment by more than 2 points if rhetoric escalates further. Yeah, that's pretty cool. And look, you can log in and get Aiden's update. And while he's giving you the update, which he writes, by the way, remember, not only is he looking at all the macroeconomic data, but he is also reading the news in real time. So he's completely up to date what's been going on 24 hours a day, 7 days a week. Now, by the way, that cost me money. So the fact that it's on a free page is kind of ridiculous, right? So while he's reading you the update, trade this long, trade this short, nothing else is worth your energy or time or attention. You like that? That's a good homepage. Isn't that the best homepage in the entire world? Hey, this is what's been going on when you have not been watching the market. And by the way, this is long, these are short, nothing else. That's it. Done. Now, of course, this is Forex focused. I'll expand it shortly, but you know what? Papa's busy. Pretty cool, in my humble opinion. Not too shabby. Now, we all know I want you to be amazed, and you're like, dude, I'm going to upgrade my account. Yeah, so you pay a little money, but you don't have to, but you should. All right. Do you guys ever click on the scenario analysis? Best case, base case, worst case. Excuse me. This is updated every half an hour. Seriously, you're like, wait, you don't even look at this? So this could help you in the sense of, based on what is actually happening in the world right now, not just something you'd read in a textbook, but actually what is happening in our planet right now. Economically, but otherwise. Everything, all known information on our planet relative to financial markets. It's been synthesized, and remember, Aiden, in his brain, every day has 5 million, I'm guessing here, but 5 million data points, plus all the news coming in real time. And then, so he thinks about it and says, well, what if things change? And what's the likelihood of the change? And how would that impact the market? That's what this is. It's a beautiful use. It's a beautiful use of artificial intelligence. And remember, Aiden only knows how to trade. He's not thinking of, I don't know, the emotional context. You know? So anyways, let's get our update on headlines.
Gold price forecast. Near-term bias remains bearish as 20-day EMA slops downwards. Oil. Markets wait for direction on Gulf conflict. Rabobank.
UK labour productivity rebounds 0.9% in Q1. Qatar's foreign ministry. Normal traffic through Hormuz has not resumed. Morning bid. Ceasefire on a knife edge. Iran's army. We would open new fronts against US if it resumes war. Canada CPI expected to show rising inflation in April, pressuring Bank of Canada rate outlook.
Indian shares. Give up early gains. IT stocks rebound.
Okay. All right. Sort of mixed kind of news out there. Nat gas, winner chicken dinner. DAX up, Australian stock market, well, stock exchange is up. French stock exchange is up. Cool. So we got some stock indices that are Oscar Mike on the move. Silver down, copper down, Brent down, Aussie
Investing
dollar
live
down,
European
S&P
FX news
down.
wrap. UK jobs data disappoints. US dollar remains supported.
So, by the way, the point of this page is you can log into traders.com. Remember, this is free. This Squawk Box is free. Most people pay $100 for a Squawk. This one's free. This one's good. So what you do is you just open this page and then you minimize it and you go through your trades. Meanwhile, you're constantly updated with the news as it comes in. Hey, trader, have you heard the news? Yeah. So you just minimize it and just run it in the background, and the Squawk Box reads the news to you as it's coming out in real time. Oh, that's what a Squawk Box is. Cool. So let's see how you feel. How do you feel about the market, everybody? Let's take a look. $56 risk on, 39% risk off, and a couple of people are very risk on. Interesting. Well, let's analyze it. In particular, to those who are very risk on, a score of basically 0 doesn't lean toward your very risk on. And 5 out of, I don't know, we were over 10. So we're half the risk on we used to be. Half the risk we used to be. I'm feeling so bull. We're half the risk on than we used to be. And right this second, we're flat after a bearish period. I would not say that you're wrong, but I would say your opinion or attitude or bias is misaligned. Now, of course, it may do better down the road, right? Yeah, okay, Sim. Do it again. Send it to me now, and I'll get to it later this morning. All right. So that's the big part here, based on many calculations, each of which are weighted by importance, like, let's say, the correlation coefficients to each other. So we create weights on their importance, and in particular to each other, but also to risk itself. That's how we create the weightings. How important is the Japanese stock market relative to risk? Well, we don't just make up that weight. It's mathematically been derived, right? So we do all of that. Then we look on 3 different time frames to see, okay, how's this risk now relative to what has been going on for a while or even a while longer? And then we say, well, what's going on now is more important than what's been going on 30 days ago. But, so we make a lot of very considered measures of risk. And so the whole point is we want to try to line up our bias of right here, right now, with what is actually happening. And we're trying to get inside information, really, legally and ethically, measure what institutional investors are actually doing. And so you might be very risk on, and I'm not even disagreeing with you. I might actually be very risk on. But we have to know when to make the trades. We need to know when to double down and triple down and pyramid up, scale up, get big. And right now, we don't have that. So you might be right between now and next week, but based on many, many, many calculations and measurements of what is happening in the global markets, it's not right now. You might be right, but you're not right now. So your trade wouldn't be right now. Now, the caveat to that is if you've analyzed the assets you want to buy. So, like, I'll throw out an idea. You want to be long Aussie dollar and Aussie yen because they tend to do well in very risk-on scenarios, in particular this time of year. But we already assessed what's happening right now in the first 5 seconds of your login, that those trades are not working right this second. They might work later today, they might work tomorrow, they might work next week. And so in the long run, in general, you might be 100% correct, but right now you're 100% wrong. Aha! So why don't you wait? Instead of going shopping while you're hungry, okay, you see? Because if you go to your charts, you're going to find a reason to go long. But, like, you might see a pattern. Like, I saw a pattern just right before our webinar going long CAD yen. And I don't mind selling the Japanese yen. And on that 15-minute chart, it looked like it was turning north. And in fact, it did turn north. Okay, so I observed an opportunity. Now, this is what we do as traders, right? The thing is, it's not a smart opportunity to take. Now, when you just look at the chart itself, yeah, looks fine. But you have to put it in context of, well, you might end up with a trade. You're like, that's a beautiful 5-8 cross. Okay. But there's no mathematical way to measure a probability of it continuing and running so that you have a short-term success versus just fizzling out and doing nothing, or even collapsing and reversing on you for a loss. There's no mathematical edge. There's no way of knowing if it's going to succeed or not. And based on what it's been doing, I would guess the probability of, yeah, okay, it might be up for a while, but it's more likely down later, or in general. And so we need to kind of remove that, or instead of remove it, say increase our probabilities of success without additional risk. We have the data, so we should try. You see what I mean? So going back to those that voted, we want to do a better assessment. So if you're very risk on, you're probably not going to get a trade today. But we have tools at Traders where you can just sit on the page waiting for your Aussie yen long. I don't think it's happening now, but maybe later today, tomorrow, later this week, next week, it happens. And now you have your conviction, because now you've been waiting this period of time. And by then, let's say the daily assessment of risk is a 3, and overall we're closer to a 10. And now you got the thing that you've been looking for. Okay, now get going, get in it, get big. Scale up. I am Groot. I am big. Does anybody speak Afrikaans? I was in an Uber the other day, and I'm like, hey, where are you from? South Africa, right? So anyways, so I blew her away. When we got to our place, I'm like, chirp, chirp. So anyways, I am Groot. I am big. I am big. But you got to know when. Yeah. And that's the context of data. Otherwise, everything looks the same. A 5A cross is a 5A cross. There's no context. Especially if you only look at a 15-minute chart and you don't know what's happening on the daily. Where are we going? I don't know, but I'm going to go long. You're like, really? That's it? Boom! So this page gives you a little more detail. So, like I was saying, hey, you're very risk on. Let's go long Aussie yen. Niet! Huh? Nova! That should be in a Spanish accent. Sorry. No. No go. That's a no-go. Stand down, soldier. You might be right in general, but you're not right now. Aussie is a dog with fleas. Yen, neutral to actually bullish. So you might be very risk on, but that would be one of the dumbest trades. Now, I said you might also want to go long Aussie US dollar because that's a very risk on thing. Dude, that is the dumbest trade. You couldn't be any dumber. Now you're like, no, Wayne, I have a cousin that's dumber than that. Okay, well, besides your idiot cousin, that's a pretty dumb trade right this second. You shouldn't be looking at that, and that's the problem. You might be waiting, or betting, or maybe you throw down a limit order because it used to be going up and now it's going down, so you threw in a limit order. But the problem is it's just not moving in the right direction. I wouldn't throw a limit order to limp into this trade right this second. I'd rather sit and wait for confirmation, maybe miss the first move, but definitely catch the second move. Remember, there's no glory in Forex. There's no need to have perfect trades. You can miss the first one, but do not miss the second, third, and fourth. Let someone else take the risk. Let someone else show you the way. Be stoic about it. Try to remove that emotion. Remove the pride. Trade when you can confirm. Okay? So it may actually end up reducing the amount of trades you make. That's okay. Because let's say because you missed the first trade, let's say you lose one winner and one loser overall because you're also better at getting out and you're a little more conservative getting in. Overall, what happens is one less winner, one less loser. You're still better off. Okay? How many trades do you make a month? 100? That's only 5 a day. So you make somewhere between 1,000 and 1,500 trades a year. Would that be about right? Should be. 5 or 6 trades a day. That's about right. And so if you if you look at your trading from that point of view of 1,500 trades, you're looking at an aggregate, and inherently you're going to smooth out the highest highs and lowest lows, which should tell you that you can be risk averse. In fact, the mediocrity is better. Your biggest winners will always be offset by your biggest losers, because we all make mistakes. We all get trapped. Things do change. Emotions do get in the way. No, you're not going to be a perfect trader. You try, but the thing is, everything in the middle, the boring stuff, is what's going to put your kids through college. The boring stuff's what pays your mortgage. What does this all mean? There's no glory in it. Nobody gives two hoots about your biggest winner, because it's going to be offset by your biggest loser. We all have that. So it's the grind. It's the boring stuff. It's all the stuff in the middle. So you can miss the first trade. It's okay. Nobody can see it too. When you're looking at 1,500 trades, nobody knows if you could have been in one more trade a little earlier. Nobody can see that in the aggregate. But what they do see is your consistency and your risk tolerance. And of course, your profit level. So you can afford to not throw down a limit order simply because of a higher high, especially in a consolidation mode. And in this case, wait for Aussie dollar to turn bullish. It's clearly bearish. And then wait for Aussie yen to turn bullish. It's clearly, okay, this is Aussie yen is bearish, Aussie dollar's very bearish, and you're a bull. Okay, just hang on. Sit tight. Don't use a limit order. Sit on your hands instead and wait. And we have tools like this signal card, and you wait. Now, this is what I just told you. Aussie dollar and Aussie yen, they're bearish. Great. Now you could sit here for hours, days, weeks, wait for it to turn bullish. And when it does, now you go to work. But what's clear to, and remember, I'm speaking to all of us, of course, and I'm even speaking to myself, because I have, as a trader, I have to remind myself all these rules, which is a huge benefit. But for those that are very risk on, not now, okay? Not now. You might be right. Just if you can wait for like Aussie dollar and Aussie yen, or Aussie CAD, we've been bearish on CAD for a while. Okay. And Kiwi dollar, Kiwi CAD are pretty much the same trade. So these are all the same trades, and you're very risk on. Cool. Absolutely don't do it now. Absolutely don't do it now. But maybe soon. Just not now. And you can just park right here and wait for these to go red to green. And when they're all green, go! And don't like tiptoe through the tulips. Get in there. You got the congruency and your bias based on the long term. And you're like, Wayne, I'm long term risk on. Cool. Then you'd go wham, 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 wham. Now you'd go to your charts and set them up, of course, but you wouldn't hesitate. No, 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 no. It is not a false signal. There's no guesswork here. It cannot be false. It's not a false signal. We are doing, for each one of these, 14 calculations of price. It's based on price, not macro. This is not telling you what should be happening. We have other parts of the analytical platform that tell you what should be happening, could be happening, usually happens. None of that is on this. This is 100% factual right this second. So sometimes it turns bullish, but it's almost a false signal. No, 100% fact. Okay? The price differential between the US dollar and Aussie dollar, 7 calculations to measure and create an index value. Okay? That means US dollar compared to all the other G7 currencies. So we have 7 prices, and then we create an index of it, and then we do Aussie dollar an index by looking at all the G7 currencies: Aussie dollar, Aussie yen, Aussie kiwi, Aussie cat, Aussie blah 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 blah. And then we create an index of that for an overall value of Australian dollar, and then we look at the differential between the two, and our conviction score is this is right this second. Boom. So, okay, now meaning that it can go from red and the next day is green, but that's exactly what you want. It's not a false signal. That is the fact. And what most newer traders do, they jump the gun. They're way too fast. They're guessy. They're feely. And they don't have the patience or discipline to wait. And remember, some people here are very risk on, and I have no quantitative proof that they're right. So I'm in particular speaking to them to say, you might be right. I don't know the future. I can't confirm that the very bullish attitude is correct, but I don't know either. I would say seasonally, I would agree with them seasonally. Oh my God. Right? I'd be out here like Yosemite Sam. Oh, I'm rooting and tooting, right? I'm risk on. But not right now. This is not the time for that fight. So instead of looking at it as a false signal, it's a timing signal. A timing signal of what are all the other institutional players and dumb money doing with these assets? Not long. So another way to do this, just if you love the fact that this is just price, this is just the analytics of price, then you can start with swing trades or position trades, right? Okay, let's say position. This is over 30 days now. Okay. And I've broken it down to bullish, bearish signals, and slight edge, which means mediocrity, and no way Jose. And right now, that Aussie yen is actually slightly bearish. So for those that are very risk on, you are not aligned with actual market conditions. And it's not market conditions like, you can't control which way the wind blows. Do you know what? These market conditions, they're created with money, with cash flow. So be careful, very risk on, folks. Right now, nobody agrees with you. Oh my God, was that a bitch slap? Yeah, it was a bitch slap. Now, you might be right. I can't predict the future. Normally, I would 100% agree with you. Great. Nobody cares what you think. Nobody cares what I think. It's what you can prove. And you're out there on your own, bro, trading against the entire world. So maybe you're the top 6% of traders in the world. You know the future better than everybody else. That might be true. Your mama might have popped out a genius. But nobody's trading with you. Right? Like, you're going nowhere there right this second, but this is slightly bearish. So maybe it becomes, I guess it's got to go from slightly bearish to neutral, and then neutral to bullish. But when I can confirm that, that's when I'd get involved, you know? So the way I've always taught, you know, strategic and tactical, right? One way to look at strategic is it's a hypothesis. And you're like, well, I've been analyzing global money flow and seasonality and the commitment to traders report and all this stuff. And I believe we are going risk on. And I believe the war is going to come to an end. And I believe. Okay. So now you wait. And when you can prove, okay, it's not even proof. When you can confirm your hypothesis has truth, then you get involved. And I'm telling you, bro, I don't know if your profitability is going to go up, but you're probably going to make a shit ton less losers. But think of your confidence level. If you only trade when market conditions agree with the hypotheses and you put a lot of thought and time, oh my God, that's what professionals do, by the way. Professionals sit down with their potential clients or limited partners and say, this is my vision for the future. I think the markets are going to go this, this, and this because of that, that, and that. And many calculations were made. And we think this is the probable outcome of the future. Therefore, we know what to look at. And by the way, this is, I think, the most important thing, so I hope you're listening. The most important thing of moving from amateur to a better trader, maybe even profitable trader, I think the biggest thing isn't technicals, it's not fundamentals and all this kind of stuff. It's your decision-making process. And let me be clear, and I do talk about this in my book, which I wrote 20 years ago, that it's your vision for the future. And if you have the data, you know how the markets will perform if your vision becomes true. Now, this is so important because what I say in my book is you can see with your mind's eye. You've already thought about, you think the stock market's going to crash. Okay. When does it usually crash? Why would it crash? What would the catalyst be? What would the charts look like? So now imagine you're looking at a double top on the S&P 500. And it's July, and you've done some research, and very often your analysis says this is often a time when the markets fizzle out. Sometimes it's a reversal, sometimes it's a fade, sometimes it's just moving sideways, but you're like, yeah, that would be about right. So now you go to your charts, okay? And it's July, and you believe there's a crash coming. And you know why it's coming. Maybe it's the election, maybe it's the war, maybe it's whatever. Doesn't even matter. You thought about it, you have a hypothesis, great. The most important thing is you're looking at your charts and you have a bias, not just for direction, but you know it's going to reverse. That's your hypothesis. And now you're staring at your chart and you're watching the pullback that occurred recently over the last few weeks, and now it's been rising and rising and rising, and then we get to the double top. So it's either going to break higher or it's not. And you don't believe it's going to break higher. You're a bear. You're like, oh my God, we're going to crash because Trump of this and that of that. But you can see it. Okay, this is the secret, everybody. You can see it. You can anticipate it. You're like, dude, this thing is going to double top. And guess what happens? We get up to that resistance area. You can just see it. This is where it's going to happen. This is the top. And we're going to fizzle out until October. And it starts failing to break out. And now you're looking at this, and everything is suggesting it's going to fizzle and fall. Now you have the guts and the confidence and the discipline to slowly step into that position and build up and let all the winners run and all the way till October, because your research shows you that's when the fade usually ends, is around the third week of September. And so you build your shorts and you build your shorts and you build your shorts. But the thing is, you're analyzing and you're thinking and you're anticipating and then you're confirming and then you're actually doing what you intended to do. Instead of being an observer, you're a participant. Now imagine your confidence level, huh? Yeah. So it's that makes the difference. And you can watch your charts, or you can watch your analytical platform and wait for it to scream, S&P just went bearish. Get involved, son. Do what you got to do. So today's example was you're very risk on. Aussie dollar's going to go up. Aussie yen's going to go up. Why open this up? They're all bearish. Take a walk. MoveOn.com. You might be right, but you're definitely not right now. You're Mr. Not Right Now. You're not even in the friend zone. H2O producer. Mine was nonsense. Yeah. So it's incredible how your trading can change and your psyche can change when you have the truth in front of you. Okay? Yeah. That's the whole point. And everything we've seen so far is free. So you kind of need to use it, don't you think? So how about that Canadian CPI? Well, we measure inflation in Canada because we're trying to figure out what the Bank of Canada is going to do with monetary policy. So this is one way to measure it. Is it going up, down, or sideways? Inflation going up is bad. Might make the Bank of Canada raise interest rates and slow their economy down. Now, if you look at Canadian GDP, you're like, I don't know if they want a slower GDP, right? Okay. Is there another way we can analyze what the Bank of Canada is going to do? Oh, son. Oh, boy. Come on now. Fetching. Look at this. We pulled this directly out of the Federal Reserve. It's pretty cool, right? Talk to me, Canada. Now let's see if it works, because I haven't used this I've been out of the office. Okay. What do we know? Look at the detail that we have on this. Okay. Is the Bank of Canada going to raise interest rates? Well, the media, like FX Street, CNBC, Bloomberg, they're all talking about this CPI is really going to tell us whether the Bank of Canada is going to raise interest rates. We've already done those calculations. It's not likely to happen until September. Ha! Hoo-ha! Now, how do we figure that out? We figured it out mathematically based on all of the yield curve of Canadian treasuries, their price, their change in price, the spread, and the shape. And yeah, it ain't happening yet. So we might have some important news today. It might be important. I mean, the data itself is important. What is even more important is, okay, the number comes out. Is it about the same as before? Or is it much higher or much lower? That'll be more interesting. And if so, what do we actually care about? The central bank. What will the Bank of Canada do about it? Now, we can track what the Bank of Canada has been doing, but we want to try to analyze what they will do in the future, and even more importantly, when. And you can't actually ask the Bank of Canada, hey, when are you going to raise interest rates? Oh, we're going to do it in September. But we can look at those that buy, on aggregate, all of the debt issued by Canada and look at the price that they're negotiating. And as I mentioned to you, you can reverse engineer and derive the implied level of interest rates at that time. Do these things change? Yeah, as the data change. But we can take a look and measure all the smart money in the world, because it's mostly institutional investors buying Canadian government treasuries en masse. So when you're looking at the big aggregate, you know, I don't think any of your friends or neighbors own $100 Canadian government treasury. So somebody does, but it's not you, not your neighbor, not your friends. There was a time in the world, by the way, when like a baby was born and you'd give them a 30-year, $100 30-year treasury. Here you go. Well, we don't live in that world anymore. So who's buying all this debt if we're talking about trillions? Well, the institutions, right? Cool. So they're pretty smart. They're very sophisticated. They have models. They have quants. They have PhDs, right? Their fixed income and research market or fixed divisions are not that dumb. And in fact, when it comes to bonds and treasuries, it's heavily mathematical. So in the calculations of valuation, it is part of the calculation to say, well, what is the interest rate in the future based on which treasury they're buying? 1 year? Well, what's the interest rate between now and 1 year? If it's 5 years, well, what will interest rates be in Canada 5 years from now? You have to do best, worst, and base case scenarios. Well, we think the war is going to be over, and global trade will pick up, and then there will be demand for this and weakness for that, and you do all these calculations to figure out what will the interest rate probably be in Canada 5 years from now. And then they make the decision. The model, it's very simple math. Everyone that goes through a finance class learns this model, time value of money. It's pretty straightforward. And so you just do the calculation. What will this bond be in the future? Well, that depends. What are the interest rates? Because think of it as an opportunity cost. You can do this or you can lend the money there. So it has to be worth it. Well, what is the value? Well, it depends on the interest rates or inflation. Depends on your angle of attack, but they're all kind of the same. So you do a very, very, very basic calculation. Now, if it's 30 years, you got to do 30 calculations. Yeah, okay. But it's, and it's probably all automated now, but when you're in, I remember, I think I was analyzing real estate, and you have to do the time value of money to figure out what the value of the apartment building is. Right? Well, you have to do your rent, right? Minus all the expenses to get your net operating income, and then you have to calculate your finance charges, your mortgage and all that. And then, then at the end of the year you have money, but then that's 1 year. So if you're going to buy an apartment building and you got a 30-year mortgage that you're going to refi every 5 years, you have to do cash flow analysis. And so what is the value of that cash flow 30 years from now to this year? And then you come up with the value of a building. This is what finance does. So every single institutional investor in the world does this math. And now they may slightly disagree because they change the variable. What do you think the interest rate will be in 5 years? We may all agree. More likely, we all slightly agree. Nah, we think it'll be higher. Nah, we'll think it'll be a little lower. But most people are going to be about the same. So they plug the variable in and they tell you the value, which is we are willing to pay this amount of money. We're willing to pay $98.50 for a $100 bond, and you pay us back in 3 years the full 100. That's how it works. Okay? Cool. So we are willing to pay. If you reverse the math, and you know how you can do that, you move, the future value and the present value, so you put the present value there and you move this and then you move that. It's just what math is. And you can derive what they decided I was. What is the interest rate of Canada in that future period? We can look at it on aggregate, because like I said, some people think it'll be a little higher, some people think it'll be lower, but most calculation, when you're looking at an aggregate and it's thousands of investors, the crowd is usually right. Right? You take off the high, you take off the low, and most people are right. And then you can derive and you say, oh, the Bank of Canada is expected by thousands of investors investing trillions of dollars. Right now, interest rates are assumed or implied. It's implied because we reverse engineered their decision-making process. So the implied interest rate level is a quarter point higher in Canada in September. So meanwhile, CNBC is freaking out like, this is so important. It might be important. We'll find out after the data comes out if it's extraordinarily higher or extraordinarily lower than expected. What actually matters is we track the change of implied interest rates. We don't listen to the knucklehead on TV that says, the Bank of Canada has to raise interest rates because of this. Well, we actually already know they're going to raise interest rates, so that knucklehead hasn't really added any value. But I'd like to see what thousands of institutional investors that spend millions of dollars making the decision that I just spoke about, once they made their decision, traders will tell you. So we can help you understand what's going on, and we spend millions of dollars analyzing that data for you. Well, that's not 100% true. We do spend money, and it's expensive, but we're analyzing what others have spent millions of dollars doing. Would you like to know that? Would you like to know? Think of it. Every large institutional investor, each spends millions per year on their economic and finance research to tell you, what are we willing to pay for a Canadian government bond? Well, which one? They can derive mathematically its exact value, and they will buy it. We figure out, so they spent millions on that decision. Just one company spends millions, and there's thousands of these. And we track that. It's $1 billion calculation that we put into traders. Would you like to know what that value is? That might cost you $200 a month. Or you can guess. Or you can just watch TV. Listen to a YouTuber or a blogger. Let the YouTuber manage your net worth.
Spike alert, 1 minute until Canada CPI is released.
Or you can manage your own money because you're the intelligent adult in the room.
Spike alert, 1 minute until Canada CPI is released.
Aussie's still a dog with fleas. US dollar, strongest currency in the world. Definitely not very risk on. Maybe this will change everything. Watch the value of the CAD. It's slightly strong. Okay, when the news comes out, maybe all of that changes, huh? That's why we're watching it in real time.
Canada CPI,
Canada
actual
CPI,
3.1%,
actual
Met
3.1%,
Met forecast.
Canada
Canada
CPI,
CPI,
actual
actual
Oh, it
3.1%,
worked!
Met forecast.
It worked. Now we heard a bunch of extra voices, but oh my God, it worked!
Investing Live European FX News Wrap. UK jobs data disappoints.
Watch the value
US
of the
dollar
CAD.
remains supported. Gold price forecast. Near-term bias remains bearish as
Dude, it
20-day
worked!
EMA slops
It
downwards.
even pulled the right data.
Oil. Markets wait for direction on Gulf conflict. Rabobank.
UK labour productivity rebounds 0.9% in Q1. Qatar's foreign ministry. Normal traffic through Hormuz has not resumed. Morning bid. Ceasefire on a knife edge. Iran's army. We would open new fronts against US if it resumes war. Canada CPI expected to show rising inflation in April, pressuring Bank of Canada rate outlook.
ADP employment change. 4-week average increases to 42.25K.
Canada CPI, actual 3.1% met
Brent.
forecast.
Backwardation cushions risk assets. Deutsche Bank.
Canada CPI, actual
Silver
3.1% met
retreats as firm
forecast.
U.S. dollar, higher yields weigh on precious metals.
Oil prices fall as Trump pauses Iran attack plans. ADP weekly NAIR pulls 42.25K versus 33K last week. United States ADP employment change 4-week average up to 42.25K in April 25.
Dude, you could be trading with this all day.
United States ADP employment change 4-week average climbed from previous 33K to 42.25K in April 25. Australian dollar test monthly lows amid risk-off markets. High oil prices. Canada New Housing Price Index, MOM, below expectations, 0%. In April, actual, 0.4%.
Canadian dollars lost almost all its
Canada
value.
Consumer Price Index, year over year, registered at 2.8% below expectations, 3% in April.
Wall Street poised to open in negative territory.
Canada Consumer Price Index, core, MOM, rose from previous 0% to 0% in April. Canada CPI inflation, year over year, for April 2.8% versus 3% estimate.
Oh.
Breaking, Canada headline CPI came in at 2.8% in April.
Dude, the amount of news coming out is crazy. Oh, wait. Aiden pulled the wrong number. Ah. Well, what actually matters is the value of the Canadian dollar went from 0.2 to basically 0.000. All right. So I need to talk to Aiden. Let me do that now. He pulled the wrong number out of the Fed, or the Fed misreported it to us. That's why I need to talk to him. So it's actually 2.8. It's a miss. All apologies, but we are working on it, and it is complicated. Hang on, let me work on it. Whoa, he's gonna talk over. All right.
Canada CPI, actual 3.1% met forecast.
Canada New Housing Price Index, year over year, remains at 2.3% in April.
Canada CPI, actual 3.1%, met forecast.
Okay. He's learning. He's learning. We're getting better. He pulled, but he pulled the wrong cell. If you just think of it as you just imagine an Excel spreadsheet with millions of cells. The most complicated part of what we do is our database talks to the government's database. We go in, we gather the information 1 second after the government updated its little cell on the giant Excel spreadsheet. So one little data point changed from a 3.1 to a 2.8, but millions of things didn't change. And so 1 second after our anticipated change, okay, so we go there, and it's the communication that's most difficult. Then we got to grab that data, bring it back to us.
Canada CPI, actual 3.1% met forecast.
Put it into our database, and then take that new data and put it into this functionality that says grab that new data and then report it as a spike alert, and then
Canada CPI, actual 3.1% met forecast.
I don't know why it's doing that. And then say, well, what was the data? What did we expect the data to be? What is the new data? And is it a meet, beat, miss, met, whatever? And do all of that in less than 1 second. So it did everything correct, except it went into that giant spreadsheet of millions of data points in which one thing slightly changed 1 second.
Canada CPI, actual 3.1% met forecast.
And it looks like he grabbed the wrong cell. It might have been 1 over. So we'll have to figure that out. But the most complicated part worked. So I'm very happy. Even though I apologize, the number is 2.8, not 3.1. He went and did all the hard stuff. And now we have to say, no. Go 1 cell over.
U.S. dollar
Canada
index.
CPI,
Upside
actual
risks build
3.1%
on
met
Iran
forecast.
headlines. ING.
Wait, I must have a lot of pages. Let me close that. There it is. And then I close that. Okay, and so there's found out the double voices. But anyways, pretty cool stuff, man. Yeah. And so there's our API. Remember, there's API, IEA, EIA, and OPEC that we talk to. Isn't that cool? We talk to API, IEA, EIA, and OPEC. Well, you can just listen to the expert on CNBC, the knucklehead on CNBC, and usually they have no idea what they're talking about. Yeah. Yeah, I was noticing that this top end has been changing a lot. We see that in the scatter plot, if you remember, that we're narrowing. The market is cooling off. So, instead of breadth of move, everything is cooling off. And, like some things were like 8s or -6s. And now everything is like between 3 and -3. Look at that. tells us the market is moving to neutrality. So now we're looking primarily at macro. Well, I'd say we are looking at 100% macro because for some reason he's not pulling chart data, which maybe explains some of the smaller scores, but not necessarily. But this is actually kind of a cool thing. Maybe I'll do this as a feature. Maybe I'll say, show me the score with momentum and trend on the charts, but also show me pure macro scores. Kind of like that, actually. So I might move towards that. But the market is moving towards neutrality. And you should know that. Right? There's very few things that are bullish, very few things that are bearish. You should know that, which means you can get yourself into trades that just don't work out. You're like, but the charts were perfect. Yeah, but nobody's trading them. You need people to trade them for it to be a self-fulfilling prophecy. And nobody seems to be trading as much as we need them to. We need to trade with the market, not against the market. Cool. Yeah. So with that in mind, sell some Aussie. That seems to be the thing going on right now. Pound Aussie up is your best opportunity to do so. Actually, that's not true. Aussie dollar down is your best opportunity. And then your second opportunity is pound Aussie up. Will that be for the rest of the day? I don't know. The rest of the week? I don't know. But that is what is happening now. And that is mathematically precise. Peace on earth. May the pips be with you. May your profits be above average. That just happened.